Welcome back to Trading 360. It's Friday. I'm Nicole Petalides. It's time for the big three. Three stocks, three charts, three trades. Rick Ducat will take us through the charts. Here to take us through the trades, Joe Tigay, portfolio manager of the Rational Equity Armor Fund. Thank you both for being here. Joe, what'd you make of all the economic news that we got in today? Also that the bond yield ticking a little bit higher. It's at 450 now on the 10-year. Some of your thoughts about all the action we've gotten in.
I'm noticing right now, I got the 10-year up at 450. That's a notable increase. I think it's been a sigh of relief recently for it to be coming off of the 460 level. So that's something to watch. Maybe it's just a sign of strength in the economy that we're going to be able to stay stronger for longer. Also, a little bit of inflationary worries. Maybe the bond traders are worried about the long-term effects of inflation with this strong economy.
Understood. So you have a few trades for us here today. This has been a winning week for the NASDAQ and the S&P, not the Dow. You're watching Broadcom first up. Tell me a little bit about this name and why it stands out to you today for a trade.
Yeah, so I think the key to the market is going to be the data center build out. There's the AI is starting to evolve a little bit. We're seeing some big performers in some of the software companies like Palantir, but the data center build out is still front and foremost in this market. We're seeing capital expenditures way bigger than previously thought, in spite of what we heard out of the DeepSeek rumors. So people are spending money hand over fist. We saw Amazon yesterday spending just an unbelievable 105 billion in capital expenditures. That came after Google, earlier in the week was at 75 billion plus. So it's just almost like an arms race of data centers. And, it's like if you're going to have one data center, I'm going to need two data centers. And it's just a never-ending fight for the ability to process more data. So the whole community needs to be lifted here. Yes, NVIDIA is going to come to mind. There is concern, maybe some export concerns from NVIDIA, but the rest of the community is still there. Broadcom's a company that is absolutely a big part of that mix. Their networking capability is really important. It's really crucial to that mix, and it doesn't really matter which chips go in there. Broadcom's going to be a winner on this data center build-out.
Okay, and that's the idea. A lot of folks have been talking about how to play AI overall and software, hardware, data centers, etc. Let's hear what Rick says about the charts. Rick.
Well, I like what Joe said about the data centers and everything because, no piece of information is useless, and the more you can collect, the more you need to store. So, it seems like it's just something that is going to be increasing demand in the future here. But as we look at the chart, we can see that there's a couple interesting areas to consider here. We've got several volume nodes nearby to current prices, one at 238 and one at 228 or so. And price action recently has been rather odd, very choppy after we had a large gap up on earnings in December after bumping up against a repeated resistance area, that light green line near about 186. Notice there's very little volume between about 180, 186 to like 210 or so. That's when the volume really starts to pick up at these more elevated levels. So this is the important area. We're kind of in between those two nodes right now here as price declines a little bit here. One area to watch is the confluence of our yellow 21-day exponential moving average and our white steeper short-term trend line there. That comes in right around 224. So that's a supportive area to consider. In terms of resistance, we've got our other node near about 237 and then our +1 standard deviation channel at about 245 before we hit those previous highs near 252 or so, Nicole.
Yeah, we've seen some choppy action here. Thank you for all of that, Rick, on those charts. Final thoughts, Joe, on this name.
Yeah, 250 recent high. Maybe that's after recent earnings. I think we're gonna see a lot. We get earnings coming out. We got some of these chip companies start reporting these earnings. I think we're gonna see a lot of their projections for the fiscal year. So there's a lot of risk to the downside. You go back to where we were before the last earnings, all the way down 180. So it makes sense to play this name. I like playing all these names with protection, but yeah, I think we're close to all-time highs in the market because of the data center. People are spending money on these data centers. The companies that are making the data centers, they should be at all-time highs too.
Right, understood. Okay, next up you have Micron. So some of these names, as we're saying, have really been beaten down off the highs, and still great companies. But right, when we saw Micron at 157, that was last summer. Now it's at $92. Now it's on your radar, Joe, in a big way. So tell us more.
Yeah, these are just another component. I think people are just kind of forgetting. Everyone's talking about the semiconductor chips. That's the most important. It's the most expensive. It's the most high-tech component of a data center. But people will need to have memory cards as a part of this whole picture. And Micron is right there. They're going into these data centers. I think this is just a critical component of the whole ordeal. And I think being down on the weakness from some of the semiconductors is just kind of wrong, in my opinion. There's a need, there's a demand for these products for all the money that is being dumped out of these chips and into some of the companies like Palantir. And don't get me wrong, I love Palantir, early owner of Palantir. I think it's a fantastic company. But right now at $115, I can't really justify buying Palantir rather than these three names. So yeah, I'm just saying it doesn't make sense that some of the other parts of the AI trade are going bananas, but the raw data, the raw meat and potatoes of it are not.
Okay. What do you think here? I mean, this is a name that obviously is well off the highs. Rick, what do the charts tell you?
Yes, it is well off the highs, but that high point was kind of extreme. That was not where a lot of the price action typically was. As you can see from our volume profile study, once again, a lot of the trading came in around 130 and 121. So even though we did have that big spike up around shortly before the earnings event in June, for much of the time, price has been pretty consistently between about 85 and 113. That's our green and red trend lines, or excuse me, horizontal lines there. And volume profile gets a little bit messier down at these levels here because there's several key areas of trading here. So look for those nodes, look for the spikes. They come in roughly like 90, 95. The point of controls at like 103, and then again at 110. So those are the heavy trading areas here. Notice as well our moving averages are clustered quite closely together. They are trending downward for right now here. Price, I think you could argue, is maybe even compressing into more of a symmetrical triangle range here. So the absolute points, though, to consider: 85 to the downside, 113 to the upside. That's pretty much a pretty clear road marks for where we've been for much of the past year.
Okay, thank you for that. And your thoughts there, Joe, based on what Rick is showing us?
Yeah, well, I think we're on the lower end of the range. I don't understand why it would be on the lower end of the range. Still, it makes sense to be protective on all of these names. There's a lot of risk in the market broadly. There's a lot of headline risk going out there. We had 2 straight weekends of like huge down moves in the market. We'll see if we can get through a weekend without one. But I think it just makes sense to just look at the upside, something optimistic here. There's so many high-flying parts of the market. There's so many exciting things about the AI trade, but sometimes you just gotta stick with what's simple, and what's simple is usually right. This is a component that is needed for these data centers. We're building as many data centers as we can, and this company is right in the heart of it.
All right, and last but not least, this is a real tech-themed big three today. Alphabet really got walloped. Still for the week down almost 9% after its quarterly report. A lot of scrutiny on cloud and CapEx spend and all that. Right now, down 2%. Where do you think this could be headed?
Yeah, I don't get it. I loved their earnings. Every important metric was spot on for me. Just a hair smaller, a hair miss on their cloud revenue, which we're going at 30%. Is that we're really going to be that upset about any misses? They're spending the money. The street doesn't like the fact that they're spending the money. I trust Google. By the way, this earnings, they became the most profitable company in the world. They're making more money than Apple right now. So everything is working for Google. People were worried that the search is going to get hit with the AI. I don't see it. I think as long as they keep that brand, in place where you think of searching, you think you're going to Google something, they're going to be fine. And they're hitting on their AI production. Gemini has been a huge improvement. So I think I'm buying this pullback 100%, adding to my position in Google without a doubt. Their cloud growth is going to be there. And they're spending the money. They're spending it cheaper than some of these other companies because they can. They have their own products to put into these cloud their infrastructure play.
All right, so you're a fan, and you think it's even at a better price right now. Rick, your thoughts?
Yeah, it's about a 10% drop or so from those intraday highs that we saw just before earnings. So probably not the most fun move for someone who got in at those highs there. But when we look here, we can see that the volume node in this case, the nearest one to us rather, was about 190. That matches up roughly with those previous highs that we saw in July. That was the old high there. And then we can also see that we've fallen through some other important areas. We gave up our yellow 21-day exponential moving average, our solid blue line, which is our linear regression line, our line of best fit, and our orange 63-day exponential moving average. So we've fallen through some key points here. Notice as well on the RSI that our green trend line has been broken, and we've broken through that 50 midline as well. So much more of a shift toward the bearish side for this momentum indicator here. If we were to keep moving lower, a couple points of interest, I think. First would be our dashed green line there at 182. That represents a gap that we had back in July, a high point that we had in November, and then another low point after a gap up in December. So it's one of these key price levels where there's a lot of activity, stopping and starting at this level here. So that's one. And also, if we were to break below that blue trend line there, the gap that we formed in December would come in around 176. That also lines up with a sizable volume node. So those are some downside areas to consider. And the upside would be retaking that volume node near 190 and breaking out of that range from 197 to 202, Nicole.
Yeah, understood. Great to see you, Rick Ducat. Thank you for the charts each day here on the Big Three. Joe Tigay, we think about all these Mag 7 names. It's amazing how much Meta has been outpacing. That's up now looking for the 15th day in a row of gains. When you think about the Mag 7, you did mention you like here Google today, Alphabet, Google. Any of the others that stand out to you?
Yeah, no, I own. I think I own them all. Some are more expensive than others. Meta is actually, like Google, has a relatively cheaper PE ratio. So another reason to like those two names. I think Google maybe is getting some, a little bit of trade war. Just getting hit, on the Chinese news, but for me, yes, it does make sense to look at these valuations. It is hard to grow for these really, really big companies when they're at these really, really big valuations. You really, just the numbers just keep on getting bigger and they keep on hitting. So that's hard, but it's easier for companies like Meta and Google actually when they're sub 30 at least, sub 25 in both cases to hit these numbers and justify this growth.
Joe Tigay, Rick Ducat, thank you both for the Big Three today. Really appreciate it.